Hi guys. Today we will analyze Enterprise Products Partners stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock is a median performer in the overall market. Both the short-term and long-term trends are positive. Support levels are around $24.80 and $23.30. The next support levels are around $22.20 and $21.20. Resistance levels are around $25.60 and $27.50. The next resistance level is around $29.20. In the last month the stock has been trading between $23.55 and $25.80 range. It is currently trading near the high of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 7 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 15% per year, for last 5 years. We see that the average profit margin of the stock has been around 12% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 70% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Enterprise Products Partners Company: bad, average, and good. First scenario. Enterprise Products Partners will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be a low, 2%. Future profit margin would be a low, 11%. Future free cash flow to net income rate would be a low, 50%. In this case, the fair value of the stock today would be $19. Second scenario. Enterprise Products Partners will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 4%. Future profit margin would be average, 12%. Future free cash flow to net income rate would be average, 60%. In this case, the fair value of the stock today would be $27. Third scenario. Enterprise Products Partners will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 6%. Future profit margin would be high, 13%. Future free cash flow to net income rate would be high, 70%. In this case, the fair value of the stock today would be $37. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 2.11. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Enterprise Products Partners, analysts forecast growth rate around 6% per year in next 5 years, and future P/E around 11. Again, I will use 3 different scenarios for Enterprise Products Partners Company: bad, average, and good. First scenario. Enterprise Products Partners will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be a low, 2%. Future P/E would be a low, 12. In this case, the fair value of the stock today would be $11. Second scenario. Enterprise Products Partners will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 4%. Future PE would be average, 15. In this case, the fair value of the stock today would be $16. Third scenario. Enterprise Products Partners will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 6%. Future PE would be high, 18. In this case, the fair value of the stock today would be $23. As you can see, today the stock is a little bit overvalued, $25, even if we expect the company's high performance in future. The fundamentals are decent, and the stock is fairly valued. However, keep in mind that it's a cyclical stock. It will rise and fall in line with the general economic cycle. Also, Enterprise Products Partners Company is a master limited partnership, MLP. I like the stock at these levels, but make sure you know how to pay taxes on MLT distributions before buying this stock. Company strengths. Enterprise Products Partners LP is a North American provider of midstream energy services to producers and consumers of natural gas liquids, NGL, crude oil, refined products and petrochemicals. The partnership's assets include over 50,000 miles of pipelines, 260 million barrels of storage capacity for NGLs, refined products and crude oil, and 14 billion cubic feet of natural gas storage capacity. The company has a leading position across the natural gas and NGL value chain in some of the largest producing basins in the U.S. Analysts expect growth in oil, NGL, and natural gas volumes this year. They also assume modestly higher commodity prices and continued volume and margin growth next year. The growth in hydrocarbon production from shale basins and unconventional drilling has resulted in structural cost advantages for petrochemical production in the U.S., and has increased NGL demand from the petrochemical industry. The company will benefit from continued recovery in gathering and processing volumes, new growth projects, and the planned acquisition of Navitas Midstream Partners. It provides EPD with a presence in the highly productive Midland basin. With a yearly dividend yield of 7.3%, the stock is a good candidate for dividend investing. Risks. Master Limited Partnerships, MLP, face substantial funding risk as they are required to pay out a significant portion of cash flow to unit holders, and are thus dependent on external funding. It's a cyclical stock. The stock will rise and fall in line with the general economic cycle. Investment in pipelines also involves risks related to fires, explosions and environmental issues. All of the company's pipelines are regulated by the Federal Energy Regulatory Commission, FERC. The normal tax risks of investing in MLPs apply to this investment. Unit holders are responsible for payment of taxes on their pro rata share of company earnings, whether or not any cash distribution is made. Unit holders have no control over the general partner or the election of officers of the general partner. In addition, investors' holdings could be diluted by the issuance of additional partnership units. The controlling unit holder of the partnership could also reduce the price, by disposing of a large number of units. The company is expected to show a small growth in revenue. In the coming 5 years, the revenue will grow only by 4 to 6% yearly. In the coming 5 years, the earnings per share will grow by 8% yearly. Let me say it again. Enterprise Products Partners LP is a master limited partnership, MLP. It's not a standard company. So, make sure you understand how to pay taxes on its dividends distributions before buying MLT stocks. An investor in an MLP should receive a K-1 schedule from the MLP, stating the investor's portion of the MLP's net income. Then, you have to use that K-1 schedule in your tax return. Sometimes it can be tricky. Google Pay Taxes on MLP Distributions for more information. Just for your information, here's a list of the stock market's largest master limited partnerships: Energy Transfer, Enterprise Products Partners, Brookfield Property Partners, MPLX, Western Midstream Partners, Magellan Midstream Partners, and other. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.